Namaste, everyone. Today we are going to deep dive into a company that is creating a lot of buzz in the small cap space, Shreeji Shipping Global Ltd, or SSGL. If you are looking for that next multi-bagger for your portfolio, you cannot ignore the Indian maritime sector. With the government's massive push through the Sagar Mala project and PM Gati Shakti, logistics is where the real action is. SSGL is sitting right at the heart of this transformation. We are seeing a huge shift from road to sea because it is much more cost-effective, nah? In this video, we will analyze if this stock can double your wealth by 2026. So let's get started and see what the charts and the fundamentals are telling us about this Gujarati powerhouse.
Basically, Shreeji Shipping is not just any logistics firm. They are a total end-to-end solution provider. Based out of the Kutch Saurashtra region, they handle everything from stevedoring to custom clearances. They have a solid presence in major ports like Kandla and Munja. The beauty of their business model is that they own their fleet of cranes and trailers, which keeps their margins very healthy. Last year only, they handled lakhs of metric tons of cargo. Whether it is coal, salt, or fertilizers, they are the go-to guys. When you have your own assets in this business, you don't have to worry about the middleman eating your profits, which is a very big plus point for us investors.
Now, why is the maritime sector so hot right now? You see, the government of India has planned an investment of over 15 lakh crore rupees under the Sagar Mala program. The aim is to reduce logistics costs from 14% of GDP to less than 10%. Currently, we are heavily dependent on trucks, which is very expensive and creates so much traffic, yar. Coastal shipping is the future. SSGL is perfectly positioned to capture this shift. With 7,500 kilometers of coastline, India is finally waking up to its maritime potential. This is a once-in-a-decade structural shift, and companies like SSGL are going to be the biggest beneficiaries of this Atmanirbhar Bharat mission.
Let's talk about the Paisa Vasool part, the financials. If you check the latest quarterly results, SSGL has shown a very steady growth in revenue. Their top line is growing at a CAGR of nearly 20% over the last few years. More importantly, their debt-to-equity ratio is quite manageable, which is rare for an asset-heavy company. Profit after tax, or PAT, is also seeing an upward trend. They are maintaining an operating profit margin of around 15 to 18%, which is quite solid in this industry. When you see a company growing its profits while keeping its debt in check, it shows that the management is very disciplined and knows how to run the show without taking unnecessary risks. Looking ahead to 2026, SSGL is not just sitting idle. They are planning to increase their fleet capacity by almost 30%. They are looking to diversify into more specialized cargo, like edible oils and liquids, where the margins are even higher. Also, they are digitizing their operations. Today, everyone wants real-time tracking, nah? By implementing new-age ERP systems, they are cutting down on turnaround times at the ports. This efficiency will allow them to handle more volume without increasing their fixed costs too much. Basically, they are preparing for the Viksit Bharat era by becoming a tech-enabled logistics player, which is exactly what we want to see in our long-term picks.
Every rose has its thorns, and we must be realistic. In shipping, the biggest headache is fuel prices. If global crude oil prices shoot up, SSGL's margins will definitely take a hit. Also, you have to watch out for geopolitical tensions. Whether it is the Red Sea crisis or any other global conflict, shipping rates can get very volatile very quickly. And because it is a small cap stock, the liquidity can be a bit low, so there can be a lot of volatility in the share price. You should not put all your eggs in one basket, okay? Keep a strict stop loss and only invest what you can afford to hold for at least 2-3 years to ride out these waves.
Coming to the target price, where do we see SSGL in 2026? Currently, the stock is trading at a PE ratio that is quite attractive compared to industry peers like Adani Ports or Gateway Distriparks. If the company continues its 20% growth trajectory, we could see a significant re-rating of the stock. Market experts are suggesting that if they hit their 2026 revenue targets, the stock could potentially trade at a 50-70% premium from current levels. This is not a get-rich-quick scheme, but a solid value unlocking story. If you are a patient investor, the upside looks very promising.
We are looking at a target that reflects the true potential of India's blue economy.
To conclude, Shreeji Shipping Global Ltd looks like a very strong candidate for your 2026 watch list. They have the location advantage of Gujarat, they have the asset-heavy model that provides entry barriers, and they are riding the government's infrastructure wave. My advice? Start with small SIPs. Don't jump in with a huge lump sum at once, as the market is quite high right now. Accumulate on dips. This is a story of India's maritime growth, and SSGL is a captain that knows its way through the ocean. Always do your own research or consult your financial advisor before investing. If you liked this analysis, please hit the like button and subscribe for more such hidden gems. Happy investing!